Good afternoon and welcome to Closing Bell South Africa, your wrap of the markets day. My name is Fifi Peters. It is the biggest story in the world right now, and it is also the biggest story in the continent. We'll be wrapping up reaction from Lagos, from Kigali, and also Johannesburg to one word: coronavirus. We will be speaking with an expert in Nigeria who will tell us how the markets have reacted in that side of town. And also in East Africa, where we're headed to now, my colleague Arnold is standing by in Kigali. Arnold, it has been a carnage in South Africa, judging by the reaction of the JSE. I mean, the stock exchange plunging 6% at one point. What has the reaction been like in Kigali?
In Kigali, there hasn't been a lot of movement in the market, so we haven't yet felt the effects of the coronavirus. But what has been felt is in the Nairobi Stock Exchange, where some of those companies cross-list worldwide on things like the Dubai Stock Exchange. So there has been an effect on those. We're talking about things like the Stanchart account there, which has gone down. But the biggest news for Nairobi has been it being Kenya being a net importer for oil. Now, the failure by OPEC countries, led by Saudi Arabia and Russia there to agree on oil terms is good news for a country like Kenya that imports oil, but bad news for a country, East African country like Uganda, which is trying to join that alliance group as it starts to produce its own oil. What do we mean there? That this has been the biggest drop since 1991, when there was that Gulf War in terms of oil prices, and this is down to the coronavirus because demand is less than the supply. It exceeds the supply that is available currently on the oil market scene worldwide.
Of course, down to the coronavirus, but I think, as you touched on it a little earlier, Saudi Arabia, the country triggering some form of a price war there, not having the best of agreements with Russia, and that's sending oil prices crashing, compounding the effects that we have seen from the coronavirus and the concerns around supply chains and demand globally. In fact, in South Africa earlier on today, our health minister, along with a whole host of other ministers, held seemingly emergency briefing to update the nation as to the exact status of the coronavirus, as the number of cases here in South Africa continue to take higher. CNBC Africa's Karabo Latlatla was at that press briefing. He joins us now. Karabo, it looked like a very, very, very long briefing, and I'm even wondering if it is over as you're talking to us right now. But take us through the key details and the highlights that came from that briefing earlier.
Well, Fifi, the briefing here with the minister could have been going on still. We still had ensuing questions as members of the media, especially when it comes to the issue of self-quarantine. As you know, in South Africa, we have 7 confirmed cases, and the real issue has been about the nub of the testing. Is it wide and is it deep enough to catch the disease in its early stage? But there is a asymptomatic stage, which they're saying that both the gentleman in KwaZulu-Natal province who was patient 0 was showing at the time, and therefore the scanners couldn't pick up anything because it's the dormant time of the disease, as it were. But the self-quarantine issue has been really ramped up with regards to South Africa, saying that people putting themselves in self-quarantine, and the department asked them to declare. But to most of us who were, pretty suspicious in the face of what could be a full-blown epidemic in South Africa, that it's almost as though the integrity of public health system is based on people telling us the truth. And if they don't tell us the truth, well, then we will have to play serious catch up with the particular virus. But from what we saw over here, I was pretty alarmed that we as members of the public keep getting asked to use alcohol-based sanitizers, to cough into your bent elbow, if you will, to try and sneeze not to anyone, to stand a meter away from everybody else. But none of the panelists over here were not touching their face. At no point did I see them using alcohol-based sanitizers. So this public health responsibility seems to have a lot more bearing on us. And that's what I asked the DG of Health following this press briefing here, whether they cannot follow on the footsteps of a Kenya, for instance, which has put a moratorium on international events happening there until further notice. Now, South Africa has not done anything. It has not had a travel ban, no travel restriction. We have not put a moratorium on anything. And it sounds as though it's all systems go at ports of entry. And a bigger worry for everyone here has been the land entries, because there's a lot of emphasis that's been put on air entry ports. And then another issue that will linger for a while is the fact that South Africans have now engaged into panic buying, because essentially they don't trust the panelists that were here, the guys who are at the top of the hierarchy of our health system, to be telling them everything.
Garaba, we'll come to you in a moment. I mean, I was watching from studios, and I did note the health minister himself not coughing into his elbow, but actually coughing into his mouth. So quite interesting. They're not walking his own talk. But let's take a look at the latest figures right now. Globally, the numbers of infections up there on your screen. We're at over 111,000. The death rate also ticking higher, 388,000. But looks like it's ticking higher at a much slower pace. And also, we're having quite an increase in the number of cases that have, or number of people that have recovered, being at some 62,695 or so. What was quite interesting also about that briefing, which Garaba will surely fill us in on a little bit later, was the fact that the 150 or so individuals who are in Wuhan right now, the South Africans who are in Wuhan, the procedure to get them back in the country is still ongoing. South Africa's government has not backtracked on that. That is what the minister had said. I mean, we will get back or get more information on that in just a bit, but that disease is slowly spreading in Africa in the last hour. The South African government now says that there is 7 confirmed cases of coronavirus. Nigeria now has 2 confirmed, and Kigali is watching and wondering where will be next. A short while ago, our minister, South Africa's health minister, Zweli Mkhize, gave a short briefing of the latest numbers. Let's take a listen in.
Just to indicate at this point that 4 of them have also now tested positive. I'll try and give you a sense of how they are. One is a couple in KwaZulu-Natal, in the area around Umkungundlovu area, 38-year-old male and female. They've tested positive. They have they have been put on quarantine, and they had not yet been admitted to hospital at the point when we received the results. So they are, some of them, in fact, the lady had symptoms on arrival, but the gentleman did not have symptoms, but the tests have come out to be positive. So we are therefore going to have our team to round up all the contacts and also follow up to see who else needs to be approached. They were all traveling together. The second group, another person is a 45-year-old male, again in the area of Maritzburg. Amongst those contacts, we took these tabs, the test at that time, and after those swabs were taken, they came back positive. At this moment, that one also has some symptoms, and therefore it was also put on quarantine. They will also have to go for assessment by the doctor and get admitted at that point. The next one is another female. It's another male who is in the area of Pietermaritzburg as well. So this one again is a 38-year-old male who has been found to also be positive.
Right, so of course that was South Africa's health minister there, in fact, saying that the number of cases were expected to tick higher. But of course, we have had a carnage across global markets. It's been a compound of factors, from coronavirus to the latest alleged price war that has been triggered by Saudi Arabia choosing to cut oil prices there. Let's take a look at how those global markets are trading, because shortly when Wall Street opened today, it was havoc, and the panic selling morning actually instituted a trading halt for around 5 minutes, with the Dow and the S&P having their worst days since the global financial crisis of 2008. Right, so let's continue to get some perspective of the moves that we have been seeing across the global markets today. Heading over to London right now, where Joseph Katdula, who is the head of oil and gas analysis at Fitch Solutions, is standing by. Joseph, thanks so much for your time. A lot of concerns around this crash in the oil price that we have seen, around hedged positions, around a possible credit bubble amongst these hedged positions, and also concerns around how long it will take the price to recover from these current levels. What is your analysis of what has transpired today?
So in short, the massive price drop that we've seen in oil today has really been predicated from what happened with the OPEC Plus agreement last Friday. Russia failed to agree to additional production cuts, meaning that the existing production cuts will expire at the end of March. What that effect will have on markets is seen in the price we have today, which is we'll have several million barrels coming back to the market as early as April 1st. The long-term implications for prices don't look so great, because what we have right now with coronavirus is a massive impact on demand, with a lot of different forecasts, including ours, expecting very low growth in demand with several million barrels of supply. You can then see the imbalance that we have between supply and demand, meaning that we're going to have a lot of downside price pressures for at least several years at this point, based on the information that we've been able to collect.
There's questions around whether that OPEC Plus cartel can actually continue to exist in its current form, given the fallout that we have supposedly seen with the main members. What's your view on this?
Well, I think there's a lot of questions along the lines of how long that OPEC strategy, one, could continue, but then also, two, how effective it is in terms of managing price and supply in the market. The big issue that we think that Russia was highlighting was that in the case of the demand shock that we've seen as a result of the COVID-19 virus, any curtailment in supply would be unable to match the erosion of demand that we're seeing. So in effect, from their position, it looked like they said that production cuts of any amount would be ineffectual and would actually lower their market share, as U.S. shale has done over the last several years, in terms of replacing their production barrels, from OPEC Plus parties who've basically ceded market share. So that aspect of, kind of giving up on that strategy seems to have kind of come to a head at this latest meeting, with the failure to extend or increase any production cuts from OPEC Plus.
And how about the biggest winners and the losers around what the oil price is doing right now? We do know countries such as Nigeria have set their budgets, but on the expectation that the oil price would be around $50 a barrel or so. I mean, with oil doing what it's doing right now, what are the implications for major exporters, particularly on the African continent?
Well, I think what you're going to see is you're probably going to see some realignment of budgets to this new reality of lower oil prices. Right now, our forecast for 2020 is probably going to be closer to about $40 than it is to $50, and at which point those budgets will have to be realigned. So whether that's cuts to fuel subsidies or some other government programs, investment spending on infrastructure, those are all potential areas where governments of oil-producing nations, especially Nigeria, might have to look. On the positive side, in areas where Nigeria could have some impacts, like I said, reducing the fuel subsidies, allowing the people to pay more of the market rates because now fuel should be cheaper. Those kinds of things can help balance things going forward. So there are some positives for consumers, but overall oil-producing nations will have to bear the brunt in terms of lower fiscal spending or increased deficits, which are ultimately a burden in the long run.
Joseph, apparently according to Moodys, there's some $86 billion or so in positions taken by US shale producers, the debt incurred as a result of production, and that debt is due to be paid very soon. At current levels and at current prices, do you foresee that debt being able to be repaid, or are you also forecasting the possibility of a credit squeeze and perhaps quite a number of bankruptcy cases amongst shale producers?
Well, as part of my role, I'm not allowed to comment on specific companies and the likelihood of some of those issues you mentioned, but the revolving credit facilities available to a lot of the US shale players are rolled over on a yearly basis, and with lower oil prices, that will definitely put some pressure on them to be able to renew them at favorable rates. So what you could see is higher rates, and that being challenged by the fact that cash flows will be diminished as a result of lower prices and basically lower earnings.
Joseph, thanks so much for your insights. We'll leave it there. Joseph Katdula, the head of oil and gas analysis at Fitch Solutions, forecasting the possibility of oil ending the year at around $40 a barrel. Quite a bit of reprieve from current levels, but still significantly lower than, I think, expectations this time last week. But continuing with our analysis on COVID-19 and what the latest moves in the oil market have done across global markets, we're bringing things back home right now, where I am joined in studio by Nadir Tok, an investment analyst at 27/4, Nesson Nair, senior portfolio manager at Sasfin Securities, as well as Annabelle Bishop, chief economist for Investec. Guys, thanks so much for your time. Quite an interesting day, quite an interesting Monday. Oh my goodness! I mean, talk about ushering smoothly into the week.
More
Nothing.
interesting than last Monday.
Dude, this is ridiculous. But guys, I'd like to get your perspectives, and also, I mean, within your various fields of what has happened today and how it has affected your day-to-day things or your day-to-day operations. And Nadir, just beginning with you.
Yeah, look, I mean, it's been brutal, hasn't it? There hasn't been much time to absorb what's going on, and there hasn't been much information to absorb, quite frankly, in order to react. So the problem that we're facing is that, on a mark-to-market basis, the JSE is down more than 20% from the start of the year. I don't want to say peak because we haven't reached a peak in a very long time on the JSE, but the JSE is down 20% from the start of the year. If you take that from 21 January, which is when fears of coronavirus really started surfacing, we're down close on 23-24%. I mean, this is a $12 trillion market that has lost almost a quarter of its value in 6 weeks. That's nothing to be sneezed at. And that pales in comparison to the kind of market cap losses that we've seen in the major developed markets. So the US is down 17% in dollars since 21 January. And to put into context, I mean, that's something like an $8 trillion worth of market cap wipe off that market. I mean, that's the equivalent of a top 10 GDP country.
But I saw commentary that's the equivalent of also some froth being wiped off the market that has been trading at a very high premium.
Yeah, no, so there's no doubt about it. We came into the years trading on very rich multiples, and the market was looking for an excuse to sell off, given that, and earnings weren't really that reason, because the earnings announcements that were coming out of US companies were actually quite solid. So this has definitely been a supply side shock. There's very little central banks can do with regards to dealing with supply side shocks. They can try and prop up demand, but the jobs numbers we saw out of the US on Friday is clearly telling us that demand is not the problem here. The US added 273,000 jobs for the month of January. But the market, it's almost been a non-event, because if there's there's going to be supply side shocks and companies can't get their goods onto a ship and those ships aren't shipping those goods, how on earth are companies going to sell them? And I think that's the market reaction right now and why we've seen the reaction we have. Unfortunately, as investment management businesses, we want to see data, we want to see facts, we want to see evidence before we can react, and there's been very little of that. We're in an era.
You call what you saw today little evidence.
No, little evidence in terms of the impact on company earnings,
All right, okay.
Yeah, so, the reality is we know it's going to be impacted. How much it's going to be impacted, we don't know.
Okay, just to come in there, because what has also been a non-event so far has been that rate cut, that surprise rate cut from the Fed last week. And just to bring you in right now, Nesson, I was looking at the JSE. At one stage we were trading at 48,000 and somewhat, and I don't know when the last time we were here. I think the last time we were at these levels.
More than 2 years.
More than 2 years. Actually, possibly the 2008 financial crisis, very briefly, yes. But then you had counters, oil counters. You had your BPs and your Shells down 25% or so globally. You had Sasol taking a huge hit.
On top of the huge hit that it took the previous week.
Yeah, but just your assessment on exactly what is going on and what you're doing. Are you hanging 10 and playing the long-term game, or are you shuffling some things in your portfolio right now?
So I must say, through the last sort of 3-4 years, we've been maintaining our equity position largely in offshore shares. And there's been many reasons for that, largely because of South African growth. Annabelle can talk about that a bit later on. But to an extent, we've been shielded from this really big sell-off that we've seen on the JSE in the last 2 weeks. We've also had a sell-off in overseas markets, but that's been eased a little bit by the weakening rand. The rand at 16.30 earlier today. So, to an extent, but it hasn't gone unobserved. Sasol, and it's not just Sasol. Sasol, BHP Billiton, MTN in the mid-60s. You've got shares like Into at 73 cents. Nampak at 2 Rand 50. These are levels we haven't seen in 15 years.
Are you buying at these levels though? That's the thing. Are you buying?
I'm not that brave. I'm sure there are people out there that are buying. But today's market activity was characterized by all those circuit breakers.
Sure.
We spoke about market halts earlier on. Investors at the rush to get out of the door have just been selling indiscriminately. Yeah. And somehow you feel that there's no real underlying wisdom in doing that. People just want risk off the table.
Sure.
And in times like these, opportunities present themselves. Now, I'm not sure whether those opportunities are going to be better tomorrow, probably. But you want to really maintain a very level head at this stage.
Very difficult.
It's very difficult. But
if
you're sufficiently diversified, you might want to consider, adding some exposure to equities at this stage. But if you're overexposed to equities, don't buy anymore. It all depends on your circumstances.
We're going to talk more strategy in just a moment, but one thing that hasn't been maintaining a level head right now is the rand. I got a message at 1 o'clock in the morning around what the rand was doing, and there you go. We've got the rand that will be coming up on screen in just a moment. It went to 16.30 at one stage. It has recovered, but just walk us through the movements that we are seeing in the currency, whether we were overdone right now, whether we headed for even more of a correction than we're seeing right now on our screen. What's your view?
Well, over the weekend, the rand was actually reported close to 17 rand to the US dollar. And this morning, we saw a low point of 16.97 on the screen. So clearly it had been there and come back, and of course, as we saw today, tracking back to 16, going through it briefly, then coming back out again, high levels of volatility. So, the answer to your question is we're probably persistent seeing volatility. And of course, markets obviously hoping for some type of placebo, hoping for some movement from possibly fiscal stimulus, monetary stimulus internationally, some IMF liquidity injections. All of those provide temporary support. They provide a temporary buffer from risk. But I think what we've been seeing at the moment now is such high volatility levels that, it's unlikely to see some type of intervention which would really just, dampen this perception down, because it's all coming from uncertainty. People don't know how long will this infection rate persist, what's it going to turn into, how many people end up dying, but particularly what's the impact going to be on global economic growth. And of course, we saw over the weekend Moodys revising down its forecasts for global economic growth, and also for South Africa dropping to 0.4% from only 0.7 made in February last month. So this is all creating a lot of uncertainty. I think people are battling to find direction, and of course worries about companies, marginal companies perhaps going under, and of course the impact on consumer spending. impact on corporate earnings and consumer confidence. So very much a confidence uncertainty issue, which then feeds into this high levels of volatility that we're seeing for the rand.
I'd like to pick your brain on the support measures that governments could be or have been or should be implementing right now. There was a view that the Fed's emergency rate cut it jumped the gun. It was a bit too soon. I mean, if you're thinking about adding stimulus or something, now perhaps is the time that you should be doing it. But then there's also a view that there's very little that central bankers can do at this stage, because the efficacy or the effectiveness of monetary stimulus is not the same as it was in the 2008 financial crisis. So just your views on some of those points and the degree to which they will affect global economic growth, if perhaps we don't have deeper fiscal measures that some are saying we need right now.
Look, I think certainly, that's the point, that it doesn't really matter when the interest rate cut happens as such. It's not going to get rid of the coronavirus. It's not going to get rid of, the impact on corporate earnings as such. And of course, the uncertainty again of what's it going to mean for travel bans inside different countries, not China, but Italy, but other countries now. And how's that going to impact production? How's that going to impact the global supply chain? I mean, for South Africa, we're part of the automobile global supply chain. And of course, difficulty in getting components from China is a problem for us. So just so many uncertainties at the moment, and that's why people think that monetary policy is not that helpful. It was helpful in a liquidity crisis when we had that 2008-2009 financial market crisis, and of course they'll put liquidity into the system if we need it again now. And of course the interest rate cut, let's be honest, it does provide a little bit of a positive sentiment when it happens, but then markets just tend to fade away again. I think markets were hoping for something else from the Fed today, because that's just what they've got used to. They've got used to anything goes wrong, the Fed cuts interest rates, other countries cut interest rates as well. But of course, where countries can provide fiscal stimulus, that would be seen as very helpful. But of course, not all countries can. Countries that are oil exporters now are going to be facing budget problems, with their significantly lower earnings. For South Africa, we win if the petrol price comes off, but not if we see this rand go back to 17 rand to the dollar. And so the answer to your question is, it's not that obvious what can be done, because there are many highly intelligent people around the world in all these institutions who would be doing it if they could, to try and obviously placate what's happening. And perhaps it's just a volatile period we need to ride out, and of course those measures will come in if the equities markets collapse again too quickly and too rapidly. But it's very difficult to actually prevent the fear around the spread of the virus that really has taken hold. If you look at swine flu, a lot more people died with swine flu than they have died from the coronavirus. And yet this particular spread is really creating panic.
And we're headed over to Lagos right now, where we do have Osoro Essien, who is the head of research at Vitiva Capital, joining us. And Osoro, just a question to you around the moves that we have seen across global markets today and your reaction to the kind of panic selling and market carnage that has inspired.
Thank you for having me, Fifi. Well, we have seen, just like other markets, the market lost about 2.3% today, and I would say it was more in reaction to the fall in crude oil prices as opposed to the COVID outbreak. We did have initial fears of the COVID outbreak about a week ago, and we did see that health officials took preemptive measures to try and get travelers coming in, especially from the international route, checked. There have been 2 confirmed cases now, and 2 of the cases are related, the same trip. So the fears, while they were evident in Nigeria, you would go across the streets and you see everybody with their masks and all that. The reaction in the markets have been a lot swifter to the drop in crude oil prices, and that is because of the fallout between OPEC Plus meeting. That's Saudi Arabia and Russia, in coming to an agreement to cut crude production additionally, and the result of that meeting is that we basically have a lot larger supply in the market, and as such the commodity price has fallen as low as 36. So the reactions we're seeing, we have seen sell-offs across board, and we do expect to see a repricing of debts in the debt markets shortly also. But I would say that the reaction has been sharper to crude oil prices as versus it has the coronavirus.
Osoro, Arnold Kwizera here from Kigali, Rwanda. I have about 2 questions for you. Now, the first one is, has the Nigerian government considered banning travel from countries that have been highly affected by COVID-19? Here we're talking about countries like Italy, countries like China. And what has been the impact on trade in Nigeria, being that a lot of the goods in the country are imported from China?
Yes, there will be a significant impact on trade. However, the government has not come up with any official position as to the banning of certain countries affected. We do expect to receive some kind of information from government before the end of the week. We do know that the land borders are still closed. However, placing a travel ban on countries that are highly exposed, as you said, as China, has yet to come into effect. Given that we rely on a lot of value-added goods for consumption imports here, we do think that it will, in the short run, have a significant effect on the prices of some of these essential goods, but in the long run, it may feed into the government's backward integration process, where they are slowly eliminating certain items that we are importing today, so that we do not have that recourse to always look for FX to enable these imports. So it may, in a way, tie into the government's long-term objective to be a bit more self-sufficient on local produce. So in the short run, it does affect us.
Yeah. Do we expect, because as happening here in Kigali, there's been conversation regarding the government here in Rwanda coming out to bail out some of the businesses that have been highly affected. Could we expect something similar from the Nigerian government? Are there any kind of talks regarding bailing out some of these traders that have been highly affected, which at the end of the day ties into the economy, affects the banks for those who have taken loans from the banks for these kind of businesses?
Yes, so there hasn't been any talks towards that yet. Mind you, we're kind of at early stages in Nigeria because we only have 2 confirmed cases. So if the situation escalates to a situation where a bailout would be considered, we do know that over the years the government has been able to bail out critical sectors. For instance, we do remember what happened with the banks, where there were bridge banks and the creation of AMCON to basically make sure that depositors' monies were not lost. So there may be an initiative towards that, but at this stage, I think containment and trying to make sure that the borders are not too porous will probably be the things at the forefront of the government right now.
Thank you very much, Osoro, speaking to us from Nigeria there in Lagos. Now, George, joining us from Kenya. Now, as of today, the Kenyan government has banned travel and has banned events that have international guests coming in. What has been the reaction from the public regarding this?
Thank you. The reaction has not really from the public, but the organizer of the event. I mean, I know that I myself was supposed to speak in an event next week that was involving a number of visitors from outside Kenya. Now, the government last week announced a 30-day suspension of all international events. You can imagine the organizers are not very happy about this, actually. So, yeah.
There's an African saying, George, there, that when it rains, it pours. And I had times for KQ there, but KQ has had to stop flights to Kenya. Now, what kind of effect will this have on Kenyan Airways and its plans to try to re-establish itself as a continental airline?
I think this is not good news for Kenya Airways, especially due to the fact that they've had to cancel some routes. Specifically, they've had to cancel routes to China, a number of them. And the other day, they gave a press conference, an update, and given a quantum of the amount of money they'll be losing based on this. it's not just Kenya Airways, but a number of struggling African airlines, Kenya Airways being one of them. This is definitely not good news for them, especially for some of their most profitable routes that they've been operating. And I think this exacerbates the financial condition, especially for Kenya Airways that had just received just about $50 million bailout from the national government. This definitely worsens the financial position.
Now, there's been some good news for Kenya as a net importer for oil, and all this, in a way, is tied to COVID-19. What has been the reaction locally on the market in regards to oil prices, being that they've gone down to their lowest, which is about $36 as of today?
This is definitely good news for countries like Kenya, who are net importers of oil, and specifically refined petroleum products. Which will expect current account deficit to come down a little further this year if oil prices stay where they are for the next couple of months. I read the International Energy Agency's report yesterday that global oil demand is slightly expected to weaken in 2020. For a country like Kenya and a number of East African countries specifically, who are net importers of oil, this is very good news, especially for their external position.
Thank you very much for your time there. George Bodo speaking to us from Nairobi, Kenya. Back to you, Fifi Peters, in Johannesburg, South Africa.
Thanks, Arnold. Of course, still with me in studio, Nadia, we've got Nesson, and we have got Annabelle. And just as we wrap up this discussion, I'd just like to understand how you are either taking advantage or protecting yourselves in this current environment by way of investment strategy before we get to a bit of the economic outlook.
Yeah.
Nadia, I mean, we have seen, you said, what, 17% or 12% markets have come off globally.
Yeah.
Are you looking at buying anything on the cheap right now? And if so, what? And also, I mean, within that equity strategy, unpack to me how you're re-looking at things like commodities, like cash and even bonds.
Yeah, okay. So bonds is an investment we actually quite like, just because our yields, particularly, well, I mean domestically rather than internationally, because our yields are just so high relative to the rest of the world. So we're pricing in sub-investment grade, we're well above the rest of the world, and to us, you know, even if we do get the downgrade, there might be the knee-jerk, but our yields are just too high for global investors to ignore in the long term.
So you're confident government will be able to pay?
Yeah, I mean, look, if I wasn't comfortable, government wouldn't be able to pay. I wouldn't be on the show, right? I'd be on a plane and leaving for the UK. So, you know, we'd have much bigger problems to worry about than, you know, my bond positioning for our clients. So, you know, so I think that's how we're tackling it with regards to bonds. When it comes to equities, you know, I think domestically we definitely don't want to compromise on the quality of the companies that we own. So, guys who have any distressed balance sheets, guys where there's any kind of inclination as to a potential rights offer, we saw what happens with Into, right? Those companies can be as cheap as you want them to be. If the market's not going to support a rights offer because the balance sheets are stretched, you know, who knows where the bottom is? There is no right price for those companies.
Sure.
So a lot of guys asking, you know, would we be looking at Sasol? Look, we're multi-managers, so we don't buy stocks directly. But from our, you know, from our perspective, it becomes very hard to create an investment case when, you know, the oil price is under $40 a barrel. They're not going to be generating a significant amount of cash. Who knows what happens with Lake Charles in the medium term?
Then there's the mandate that some investors can't actually buy junk rated companies.
Companies, that's right. Yeah, and so the reality is that there's just too much uncertainty. So if you have poor quality plus uncertainty, to us there is no right price.
All right.
When it comes to globally, you know, I want to digest the first quarter earnings numbers, or I want at least an indication of what the impact on earnings is likely to be. Obviously, chip manufacturers, smartphone manufacturers, we know the first quarter numbers are going to be horrid. You know, and until we get an indication of just how bad they're going to be, it's going to be bumpy. You know, you don't want to deploy more cash in, but at the same time, you know, we had a significant amount of exposure to offshore just for diversification purposes because they were generating growth. Won't be adding to that at this point in time, and rather wait for the news flow to come out to completely understand the nature of the beast. Because as I mentioned, you know, all we're doing at the moment is reacting to the news. And in the absence of any real information, the sellers are stepping in, the buyers are not. And that's why we're seeing these share prices gap down to the extent that they are.
Sure. Nesson?
So I think we're still maintaining our long-term themes. Tech still remains a strong theme of ours. So, you know, Apple's, Microsoft's, Google, Amazon still very much I think look for entry points. Don't invest all at once, because the opportunities will present themselves in the next few weeks. Fintech as well. Visa, MasterCard still looking good. Luxury still looks good for us. You know, a share like Ferrari is down to the 120s.
Luxury's come off so much.
Yeah, but it's still a long term. It's still a good theme. You know, you have to believe that we'll find a solution to the virus, of course. Otherwise, you know, investing is superfluous. So I think if you've got to look beyond that, and I think, you know, there's still some very good companies that people are fearful of right now, which I think is worthwhile looking at it for the long term.
All right. Travel companies, though, seeing as though you're willing to take the risk on the luxury guys that have been battered. So how about travel and tourism, aviation, Boeing?
Bear in mind that, you know, the market can stay at these low levels for much longer than you can stay solvent.
Sure.
So be very careful. Don't go too cyclical. I would stay away from, you know, travel companies, bookings, that sort of thing right now, and look to focus on quality businesses that have a lot of cash on balance sheet.
All right. I mean, we were supposed to go to Bali with friends. We're all kind of rethinking that. But Annabelle, just to get some perspective to you around this global economy, the South African economy, with all this noise that's happening, where to from here? And also, I mean, with the Rand doing what it's doing, what is your assessment around the possibility of a downgrade from Moodys in March rather than later on in November?
Well, maybe we can answer that first, because I think everyone's very, very concerned about it. Look, I mean, the thing about what's happening globally is happening domestically too. All the countries around the world are going to have weaker economic growth. And, you know, when Moodys looks at us for our country review, it does do a peer analysis. You know, so if they've revised down our GDP growth forecast from 0.7 to 0.4, they've also revised down a number of other countries as well. And of course, they already said before the budget came out, they were hoping for a lengthy period to really have a look and see how the reforms are going to take place. And of course, the fiscal strategy was announced in our budget is not something that you can judge instantly. You will need to see how it plays out throughout the year, and particularly what the impact will be on reduction in expenditure and if it can be pulled through. So from all of those perspectives, we are still not yet believing we will definitely have a downgrade at the end of this month. Right. You know, we still are sitting on the fence half. But I think, you know, if you have a look at economic growth itself globally, the concern certainly is that we could see 0.4, 0.5 come off global growth. The worries it could even be substantially further. And, you know, if you have a look at China's already put out some statistics for February, and of course that shows imports and exports obviously have suffered, along with the PMI, manufacturing, and obviously the complete PMI and non-manufacturing. All of these are, you know, substantial issues that are going to continue to feed through for this quarter, and of course into the second quarter as well at the start. International trade is likely to be substantially weaker as well, and that really talks to South Africa. South Africa was supposed to see an export-led recovery this year from a lifted global economic growth, and of course that is unlikely now. And of course that in turn, that lifted global economic growth putting through, you know, into our exports, was expected to see an improvement in incomes, and of course that was expected to see us turn around. So it's almost like we're hitting a hiatus now. Where to from here? It's very difficult to say, because we cannot see, you know, what the path exactly is going to be of the virus and how much further turmoil it's going to create. But the anticipation has been for the markets that by April we'll see business as usual.
What about the Rand, as we just take one last look at what the currency is doing?
There as well, you know, the expectation that we're going to see business as usual come April. So if indications start to look that this is not going to be the case, that we're going to see substantially further weakness. And of course, any market shock, such as the upset coming through from Saudi Arabia on the oil, that creates more uncertainty, it creates more turmoil. So, you know, for the currency itself, we probably need to make peace with the fact it's probably going to be weaker for longer, and we'll just have to wait until we start to get into a stronger position globally. If, you know, expectations of global growth start to improve before we can see the risk-off sentiment dampening down.
All right. I mean, if they are able to control this COVID, at least we've locked our travel plans to Bali. So even if the Rand does do this, it won't add to that part of the cost. But thanks so much for joining us in studio and really giving us insights into how to play the current markets right now, the current global environment that is peaked by volatility. Of course, was in conversation with Nadir Tokan, investment analyst at 27.4, Nesson Nair, the senior portfolio manager at Sasfin Securities, as well as Annabelle Bishop, chief economist at Investec. Of course, my colleague Arnold in Kigali is still there. And Arnold, I mean, last words from you as we really begin to see the coronavirus and the COVID COVID-19 effects hit the continent. You mentioned the fact that events and upcoming international conferences in Kenya had been banned for now. I mean, who's to tell, and who knows what else could suffer economically if this thing is not contained?
Yes, Fifi, and just updates coming in as we're on air. Even in Rwanda, lots of events have been postponed or banned, though the government hasn't come out officially to say that these international events have been banned. But most of them that were set to happen last week and this week haven't happened, and those as well as in Ethiopia. Now, the United Nations has also cancelled most of their events. So we will be keeping the viewers updated on the measures being taken. And concerts in the city of Kigali have also been banned. The city officials coming out to say public gatherings are not allowed at this particular moment. So the effect of COVID-19 or else known as coronavirus is being felt even in the eastern parts of Africa.
All right, dear friend, speak to you tomorrow. Have a good rest of the evening. That was Arnold over there in Kigali. Just one last look at the latest numbers of the coronavirus cases globally as things stand. 111,000 cases, 753 actually, mostly obviously being in China, where the rate of infection is slowing. It's other countries like Italy where things are seemingly spiraling out of control. It's been a number of unfortunate people who have lost their lives as a result, as you can see, but the recovery rate also looking quite strong, 62,722. Of course, earlier on today, South Africa confirming that it now has 7 cases of coronavirus, a number of tests also being done, and announcements with that, with regards to that expected shortly. Those 7 cases coming from the group of 10 that recently traveled to Italy, and it looks like unfortunately most of them caught the flu, the corona flu, not to make light of a very serious situation. JSE at levels last seen since the 2008 financial crisis. Look forward to seeing how markets open tomorrow, whether some will be taking advantage of the big moves that we have seen and buying the dips, or staying sober like some of the investment managers we spoke to who are saying they won't be buying anything just yet. That is where we leave it for Closing Bell South Africa. Thank you so much for watching. Closing Bell West Africa is next. It's bye for now.